Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.9% today, breaking a three-day down streak. As we talked about before here during this week, the end of the quarter, there's a lot of rebalancing that happens. If the stock market has done a lot better than the bond market, then you often see the stock market struggle. It didn't struggle much, which shows you the power of this market right now. Previous quarters during some of the weaker times, 2022 and what have you. I remember the third quarter of 2022, it was down quite a bit. In that rebalancing section. This barely down because the market is so interested in going upward. Again, today up 0.9%, a new all-time high. Good things, really, really good things. And one of my friends who's in the business, his name's Chad. He's in the Midwest. He sent me a text yesterday. We both follow an index called the RSI. It's a relative strength index. And it really kind of shows, where the market is and how it's stretched or not stretched or, underpriced, overpriced, those types of things. But he sent me an interesting stat. The index goes from 0 to 100. So when it's over 50 for 80 consecutive days in a row, which it has been or more, 100% of the time, the market outperforms on a 2-month, 3-month, 6-month, and 12-month basis. 100% of the time. It's only happened 6 times in the history of the stock market. This is looking a lot like the early innings of the 1995 run. And we've been talking about that for a while. We have 2 big catalysts that are driving us here. One, of course, is artificial intelligence. And the second is this pent-up demand from the pandemic. Both of those stimuluses created monster 5-year runs. The Great Depression was preceded by the second biggest 5-year run in the history of the stock market. And that came after a pandemic, obviously. And then, of course, 1995 was the beginning of the dot-com run. And that was the first, most return for a 5-year period in the history of the stock market. We have both of those factors factoring in now. So it's very, very interesting to see how this is going to play out. There's always things that can interrupt these, powerful markets, like we talked about before, these outside influences, situations, geopolitically, and what have you. Obviously, this hot market could re-stimulate inflation. The Fed could get really aggressive with raising rates when everybody's expecting to lower rates. So there's plenty of things that can trip this up. However, none of those things are happening right now. And if they don't happen, I think we do continue to see, a nice increase in the market here. Again, we're talking at the end of last year about what, we expect for this year. And all the numbers kept coming out. Hey, historically, when this happens, the next 12 months is up, 23%, et cetera. We kept seeing these different things happening. And that's essentially what's going on this year. We're up, probably an 11% range so far already. And it's just still March, first quarter. So this could be a booming year. Expect some pullback. That's normal. It doesn't have to happen. As I mentioned before, it didn't happen in 95. But we had a 10% pullback last year, and we ended up with a 24% up market on the S&P 500. So those are normal. Matter of fact, I think they're kind of healthy. The market doesn't get quite as stretched out that way. This market seems to be kind of just going sideways for a while as it's rest instead of coming backwards a bunch. We'll get little teeny, downturns and what have you. And we're probably at over 280 days in a row, trading days in a row now that we haven't had at least a 2% downturn, which is starting to become, a record. So it's a good thing as far as that goes. Just shows you the power of what's going on here. An awful lot of money was sitting on the sidelines, obviously, that's coming in now, trying to catch up with what's happening. And every time there's a little dip, we had 3 down days in a row, and all of a sudden we're up 0.9%, on that 4th day. The other pattern I think is interesting here is at the end of the quarter, we do seem to rally before the end of the quarter, at least a couple days before. I've seen that now, 3 or 4 quarters in a row. We do get the downturn from the rebalancing. And then all of a sudden, like December 28th, a couple days before the market was closed for the year, last 4th quarter of last year, that was the bottom. So it looks like yesterday might have been the bottom for this little run that we're having right now. So it's again a good time to be an investor, a good time to be in the market. So look forward to seeing what's going to happen tomorrow, and we'll see where this market goes if it continues to kind of rally up here. We've got just a couple more days, one more day tomorrow. The Friday is market's actually closed, so we'll see how that plays out. Look forward to seeing you tomorrow. Thank you.